Welcome to Shenkman Education. My name is Marty Shenkman, and the topic of this video clip is how long should you keep tax records for? I'm going to give you a somewhat different perspective than what you may think or may have read. Most advice is if you have income tax records, all the backup for deductions for your family business, your closely held business reported on your tax return, interest and dividend, brokerage statements, 1099s, K-1s, all the tax records, how long do you keep it for? General advice is you keep tax record backup for at least 3 years because the IRS can audit you for 3 years after the return is filed. But that's really not sufficient. First of all, if you have a material misstatement 25% or more, the audit period can be 6 years. So why would you throw anything away before 6 years just in case? Another point, if you've been found to commit fraud, there is no statute of limitations. Most people, unless they're really intentionally doing bad stuff, don't think they're doing that, but why would you get rid of records? So in general, 3 years should be sufficient. But here's a different perspective. Those rules, those concepts are based on paper records. When you had stuff in your attic or you live in an apartment, it was on the top shelf jammed into a closet, it was good to get rid of those tax records, right? Because you needed the space for the next year's tax records. But most people have most of their stuff, and you should have all your stuff saved in the cloud, electronically backed up, encrypted. Why would you ever take the time to go and destroy old records if they're there? So from a technological perspective, you probably should keep all your records forever. Why get rid of them? So when you read these rules or get advice on that, try to evaluate whether advice is coming from a paper world, not an electronic world. Now, if you have old tax records, what do you do with them? Very important. I think you should try to get them scanned, backed up to a cloud, encrypted, so if somebody gets your laptop, they can't get at all that sensitive data. Many people, especially older people, had file cabinets, boxes of old tax returns, brokerage statements, everything like that, in a basement, in an attic. What if somebody comes in, a repair person, grabs a handful of papers, now they can steal your identity. So from a safety perspective, you want to get that stuff taken care of and eliminate the paper. From a practical perspective, look at all the terrible weather events that we've had. If there's a flood, a hurricane, a tornado, everything could be lost or worse, scattered all over for anyone to pick it up and get your confidential information. You can hire a company now. There's a lot of companies that'll do this. They'll send someone to your house. They'll pick up all these old paper tax records. They'll scan them. They'll give you a hard drive with all the data on it, and they'll shred it and give you a certificate that they shredded it. That's what you should do. If you're helping an elderly parent or family member or loved one, and they have boxes of stuff like this, home health aides could steal it. Get it all scanned, encrypted, cloud backed up, and shredded to avoid that risk. When people get on in years and they have to downsize, and then when they have to move, they have 50 boxes of old tax and financial records, what are you going to do with it? Deal with it now. Another point. Tax records are not just for income tax audits. You may be able to use income tax records to reconstruct important information about files or data that you have if you have a casualty loss. You may be able to determine from your tax records when you bought a certain asset, or when you make capital improvements, or what you expensed on your business. So keep tax records for those reasons as well, and those don't have necessarily a determinate life. 3 years, 6 years don't mean anything. If you get divorced in the future, those tax records may help prove income, may help prove contribution, may help prove where you got assets. Also, if somebody dies, you need to save the estate tax return, or if someone makes a gift and files a gift tax return, you want those as permanent records because they establish your income tax basis and assets, and income tax basis plus improvements, less depreciation. But income tax basis is how you calculate a gain or loss when you sell something. So ultimately, it really seems to be more practical to save tax records indefinitely. Get them scanned, make them electronic, get them keyword searched, OCR'd them, encrypt them, and now you're ready to go. So again, when you determine what to do with tax records, I've tried to give you what I think is a more practical perspective, which is a little different than perhaps the legal tax perspective. I hope it helped. Please keep in mind that all the information on the video clips is for educational purposes only. Don't take any legal action or other action without getting appropriate professional advice. For more information, go to shenkmaneducation.com. Thank you.